Fortinet is up 12% in after-hours trading at the time of recording this video. The company just announced its fourth quarter 2023 results and provided an outlook for 2024. Fortinet is one of the stocks I have recently been adding to the YouTube portfolio, as I thought it was selling for an attractive valuation and offering investors a margin of safety. In today's video, we are going to go through Fortinet's earnings highlights, and I will give you my opinion on if the stock is still looking cheap or expensive after this earnings report, and what I plan to do with my shares. Before we get into the video though, I just want to let you all know that my book, The Fundamentals of Investing, is officially available on Amazon. And thanks to so many of you ordering the book already, it has become the #1 bestseller in the stock market category on Amazon. It's truly a great read, and if you're interested in checking out my new book, then I will put a link at the top of the description, and that is where you can go and find it. But with that being said, let's now hop right into the video, and I have a little bit of a Daniel Pronk slideshow today from Fortinet's most recent earnings results. For the fourth quarter, Fortinet reported total revenue of $1.42 billion, which is up 10.3% year over year. Billings also came in at $1.86 billion, which is up 8.5% year over year. Non-GAAP operating margin was 32%, so the company is still highly profitable. And Fortinet repurchased $896 million worth of shares in the fourth quarter. So the company is repurchasing a lot of shares right now. So overall, these highlights right here are in line with Fortinet's previous outlook for the fourth quarter. This isn't really a surprise for investors, or in other words, this isn't really a surprise for investors. This is very much so in line with what I was expecting Fortinet to do for its revenue and operating income and margin for this quarter. So moving on, we have the full year highlights for 2023. Total revenue was $5.3 billion, which is up 20% year over year. Now, right away, the 20% revenue growth year over year and the 10% revenue growth in the fourth quarter does mean that Fortinet's revenue growth in the fourth quarter was actually slowing down, and the business's overall revenue is definitely slowing down into the end of 2023. Then we can see service revenue is $3.38 billion, which is up 28% year over year. Billings were $6.4 billion, which is up 14% year over year. Deferred revenue was $5.7 billion, up 24% year over year. Operating income was $1.5 billion, up 25% year over year. And then free cash flow was $1.73 billion, and the company repurchased a total of $1.5 billion throughout the entire year. So they basically put all of the free cash flow towards buying back shares over the past year, which I actually do like to see, because in my opinion, Fortinet was on the cheaper end. And as I said at the beginning of the video, I do think that Fortinet was selling for a margin of safety recently. And also, as we are going to see, Fortinet opportunistically buys back shares. So when the stock is looking cheap, that is when they tend to ramp up their share buybacks, which I really do like to see. It shows that the management has a good sense of capital allocation and when to actually buy back shares opportunistically. So again, I just think that is a +1 for management. Now, this next screenshot shows us that the total revenue once again increased by 10.3% year over year, but services revenue increased by 24.8% and product revenue actually declined by 9.6%. So if the product revenue was not declining right now, then Fortinet would have probably seen, well, it would have most definitely seen stronger revenue growth in the fourth quarter. But the product revenue is currently seeing a decline, so that is offsetting the business's overall growth, which we will see here a little bit more in a bit. Now, what I also noticed from this earnings report is that cash flow from operations for the fourth quarter was $192 million, but last year in the fourth quarter, it was $528 million. So operating cash flow for Fortinet in the fourth quarter declined significantly. It declined by over $300 million. Free cash flow also was $165 million compared to $500 million last year, which means that free cash flow declined by $350 million year over year. And you can see my question mark right here because initially I was very confused by this and I did not know why this was. So then I went on to figure out why is the cash flows for this business declining. So let's get into that. So right here we have Fortinet's cash flow statement. And the major things that are a big difference are the accounts receivable year over year, which they did see an outflow of accounts receivable increase by about $90 million year over year. But then we can see this other segment right here, where last year they had an addition of $41 million to operating cash flow, and this year they had a subtraction of $250 million. This is a net difference of $290 million year over year that is impacting the operating cash flow in a negative way. Now, this other line item here has a little 1 beside it, and when we go down here to the notes, we can see that it says, total cash paid for taxes in the fourth quarter of 2023 was $341 million, including $210 million of 2023 estimated federal tax and other tax payments that were postponed from earlier quarters. So what Fortinet did is they deferred their tax payment to the fourth quarter of 2023. This is the exact same thing that Google did. So what this actually did to Fortinet's operating cash flow throughout the year was boosted artificially. And now the company had that massive $340 million tax payment, which lowered its operating cash flows quite significantly. Now, why I think that this is not a major issue or something to really worry about at all is because this is normalized when we take a look at the trailing 12 months figure. So right here, we can see that the free cash flow for the year of 2023 did come in at 1.7 billion, whereas last year it was about 1.4 billion. So when we take a look at the total trailing 12 months figure, or the full figure for 2023 and compare it to 2022, this factors in the total tax payments, and it shows that Fortinet did in fact still grow its free cash flows by somewhere around 15% year over year, which is a good thing to see. Now, this is a table of the company's results, and here we can really start to see the different trends to Fortinet's business. So the billings right here, we can take a look at the year over year percent change, and we can see that in the third quarter, billings grew by 5.7% year over year. Now, in the fourth quarter, billings have started to accelerate again to 8.5%. Now, in my opinion, this is the main metric that the market is probably focusing on right now, because I remember at the last quarter when Fortinet reported and the market saw that 5.7% billings growth year over year, it wasn't too impressed. So now that the billings growth is starting to re-accelerate and grow quarter over quarter again, I do think that the market is starting to become more pleased and happy. And in my opinion, this is probably why the stock is up, as we will get into here in a minute. Now, overall revenue growth quarter over quarter declined from 16.1% to 10.3%. So Fortinet's revenue growth is still slowing down. And this, to me, is not the best thing to see. 10.3% year over year revenue growth is still good, but it's not great to see that, the company was growing its revenue by 28%, 30%, declined to 16%, and now it is continuing to decline to 10.3%. Here we can also see that product revenue growth declined to negative 9.6% from negative 0.6% last quarter. So Fortinet's product revenue is still declining, and this business does seem to be a little bit more sporadic, volatile, and cyclical. For example, back here in the first quarter of 2022, product revenue grew by 54%, which is insane. But ever since then, it has been steadily declining to an actual decline now. Service revenue is still growing very strong and grew by 24.8% year over year, which is pretty much in line with how this business has been growing consistently over the past couple of years. So that is a great thing to see. Continuing on through Fortinet's Q4 presentation, we can see that since 2020, the company has returned $5.3 billion to shareholders through share repurchasing. In fact, Fortinet has repurchased 11.4% of its total shares outstanding over the past 4 years now. That is a massive amount of share repurchasing that the business is doing, and they are creating real value for shareholders by lowering the share count and increasing the per share value. So I love to see this because this isn't really what you see typically in these high growth businesses. Typically what you see is a lot of stock-based compensation going on and actual dilution for shareholders. Usually the stock-based compensation actually offsets the buybacks that these high growth companies do, which results in a net dilution to shareholders overall. Fortinet is one of the companies in the cybersecurity industry that is not doing an excessive amount of stock-based compensation, and they're actually buying back shares and reducing the share count. This was one of the initial reasons why I invested in the business in the first place in the YouTube portfolio, because they were a clear outlier and they seemed to really focus on protecting and creating shareholder value. Now, moving on, this graph right here shows us the product revenue growth year over year and the service revenue growth year over year. Now, there are two conclusions that we can gain from this graph. One is that the product revenue is incredibly volatile and cyclical. For example, in 2011, the product revenue grew by 45% that year. Then by 2013, it saw a growth of only about 11%. So the product revenue seems to see this massive boom, and then it tends to go back down. And in fact, in 2017, the product revenue was only growing by about 6%. Now we can see that the product revenue went through that massive boom from about 2017 to 2022, and now it is in another downtrend and seeing an actual decline. Now, this is not unusual for Fortinet's business. Again, this has happened a couple of times over the past decade, and now the business is in one of these areas again where the product revenue is declining and seeing some headwinds. Now, if we take a look at the services revenue growth, we can see that it has been steadily uptrending since about 2019. However, the growth rate to the services revenue is starting to slow down slightly, as we can see with that curve kind of starting to slow down. And in fact, in the most recent quarter, the services revenue growth was about 25%, which is somewhere around down here. Now, this is all still great to see. The services revenue is still growing at well into the double-digit growth rates, above 20% annually, and it is very steady growth. It is really just the product revenue growth side of the business that is seeing such a massive decline right now and is much more cyclical. Now, moving on, this gets back into Fortinet's Q1 and full 2024 guidance and puts things into a little bit more perspective. For Q1 2024, Fortinet is actually expecting its billings to see a decline of 5.5%. It was 1.5 billion in the first quarter of 2023, and they're expecting about 1.42 billion in the first quarter of 2024. So billings are probably going to see a decline in the first quarter. Overall revenue for the first quarter is also projected to only grow by 5.4%, which is a continued deceleration of the business's overall revenue from the fourth quarter, because in the fourth quarter, remember, it grew by 8.7%. So Fortinet is expecting its revenue deceleration to continue in the first quarter. However, take a look at this. For the full year of 2024, Fortinet is expecting its billings to grow by 1.6%. So it looks like Fortinet's billings are going to go negative. Then in the second half of the year, probably start growing again into the end of 2024. And this is the same thing for the revenue. Again, they are expecting 5.4% revenue growth in the first quarter, so there is going to be a deceleration, but then an overall re-acceleration into the end of the year with 8.7% revenue growth. We can also see that services revenue is expected to grow by roughly 17% next year, which is a pretty significant deceleration to their services business, especially when we go back to this chart right here, and we see that it has historically been growing by well over 20% growth rate. So the services area of Fortinet's business is projected to see a pretty weak year in 2024 as well. I do not think that these projections are very bullish for Fortinet. The overall business is going to be growing. Its billings are going to grow, its revenue is going to grow, and its services revenue is going to grow. But these growth rates are significantly lower than the business's historical averages. So Fortinet's business is definitely seeing some headwinds right now. And when I saw that Fortinet was up 12% in after hours trading based on this guidance for next year, I was actually pretty surprised, because this isn't the most bullish outlook for the business. And it kind of suggests to me that the market is maybe getting a little bit too enthusiastic right now. Because if this outlook was presented to investors at some point in 2022 or even in the first half of 2023, I think that Fortinet stock would actually be down 10% right now. Again, 8.7% revenue growth for Fortinet is really not that great of revenue growth, especially compared to the company's history. So again, it kind of just feels like the overall market is rewarding businesses significantly for kind of mediocre earnings results right now. It kind of suggests to me that maybe the market is getting a little bit more on the frothy end right now. And I did do a big message to my Patreon community and my Discord, kind of just explaining my overall thoughts and feelings on the market right now, because again, I do think that things are starting to get a little bit frothy. Now, again, Fortinet is currently up 12% in after hours trading at the time of recording this video, and the market cap with the share buybacks is now roughly $60 billion. Now, I did the calculations, and this means that Fortinet is now selling for a price to free cash flow of roughly 33. Now, if we go to Fortinet's historical price to free cash flow here over about the past decade, we can see that the average has been about 27.34. So Fortinet is now selling above its historical average price to free cash flow ratio. When I was initially buying Fortinet on all of the weakness when the stock was selling near $50 a share, we can see that its price to free cash flow got down to about 18.8. This was well below the company's historical averages and near the lows where the company used to sell for. For example, in 2020, during the stock market crash, Fortinet was selling for a price to free cash flow of 18.4. So here in 2023, near the end of 2023, it was selling near the same price ratio as during the stock market crash of 2020. In my opinion, Fortinet was very cheap at that moment, and it was offering a margin of safety for investors. Now that the stock has recovered so much, especially in after hours trading, and it is trading for that price to free cash flow of 33, I do think that the margin of safety is gone on Fortinet now. I do not think that it is an undervalued stock. And if I had to guess, or if I had to say, I do think that Fortinet is now selling slightly above fair value. I do not think that this stock is really on the cheap end anymore. So what I plan on doing with my own shares is simply holding onto them. I do not want to sell Fortinet based on this news. I think that it is a great stock for the long term. And I do think that the business's growth will re-accelerate at some point. And I also invested in this business because they truly do care about protecting shareholder value and returning value to shareholders. And at the moment, I'm not going to sell it because it's slightly above fair value. If this stock continues running and it gets to a price to free cash flow above 40, starts to enter maybe the 50s range, that is when I would seriously consider starting to trim down or sell my position. But at the moment, I do not want to let go of it. I can also further explain this thinking by using Stock Unlock's discounted cash flow calculator and projecting out Fortinet's free cash flow over the next 5 years. So what I like to do here is do a reverse discounted cash flow calculation. And what a reverse discounted cash flow calculation is simply finding out what is the market currently pricing into the stock today. So I just inputted the numbers to figure this out, and I changed the values to reflect Fortinet's after hours trading value of about $75.62. So this is what the market is currently pricing in to Fortinet's share price based on that $75 right now. The market is expecting Fortinet to grow its free cash flow by 11% annually over the next 5 years, to continue buying back roughly 2% of its shares annually, and to trade at a 27 price to free cash flow, which is the company's historical average, as we already saw. So basically, the market is projecting 11% free cash flow growth for Fortinet over the next 5 years. And if the company can achieve this, then it will be selling for about fair value today and could deliver about 10% annual returns from this price. Now, if we scroll down, we can actually see what this means in terms of Fortinet's free cash flow. So again, the company produced about $1.86 billion in free cash flow in the trailing 12 months, and this projects that Fortinet will have to grow its free cash flow to $3.14 billion by the end of 2028, which is a total growth of about 60%. So in my opinion, I actually do believe that Fortinet can grow its free cash flow by about 11% annually over the next 5 years. And this is why I say that Fortinet is probably selling somewhere around fair value, but it's not really offering that much of a margin of safety anymore, because again, for the stock to deliver 10% annual returns from this price and be considered fair value, it does have to grow its free cash flow by 11%. Now, the company is projected to grow its revenue by about 9% this year, so this means that things will have to re-accelerate for Fortinet for the business to be considered fair value today, which is just something to consider. So that is my opinion on Fortinet's most recent earnings report. That is my opinion on the stock being up 12% in after hours trading. It is a little bit frothy. It feels a little bit frothy to me. I don't think that this was an incredible earnings report. And again, I am kind of surprised to see this. With that being said, I do not plan on selling my shares. I plan on holding them. And that is all of my reasoning why. So that is going to wrap up the video, everyone. And if you did enjoy this video, then please remember to leave a like on it. And again, my new book, The Fundamentals of Investing, is available on Amazon. A lot of what we discussed in this video is explained even more in depth in my book, The Fundamentals of Investing. So if you do want to learn more about fundamental investing, then seriously go and consider picking up a copy. And again, there will be a link at the top of the description of this video. It's already an Amazon #1 bestseller, and I really do think that you guys will enjoy it. So seriously, go check it out, consider getting a copy. And if you do, I would love to hear what you think. But that's going to wrap up the video, everyone. Thank you so much for watching. I truly do appreciate it, and I really hope to see you all again in my next one.